Welcome back to Smart Stock Sam, the channel where we cut through the noise and find the setups that actually matter. Today, we are diving deep into one of the most talked about AI plays on the market right now, Rezolve AI, ticker RZLV. Is this stock truly coiled and ready to explode? Could a rare double squeeze event be forming right beneath the surface? And what are the real price targets heading into next week? We are going to answer all of that today, walking you through the exact technical architecture, the institutional breadcrumb trail, the catalyst calendar, and the precise entry and exit levels you need to know. Strap in, because what we uncovered in last week's data is something you do not want to miss. But before we jump in, let us give you the 60-second overview of what this entire video covers. We had a near-perfect technical prediction get almost instantly validated, and then a global macro shock tried to derail everything. We are going to show you exactly how RZLV responded to that shock, why three massive fundamental pillars are holding this stock up, how institutional giants are quietly loading the boat, and why the options market is essentially building a launching pad for the next leg up. This is a full breakdown, technical, fundamental, and mechanical. Let us get into it. Picture this. It is a normal Wednesday afternoon. You are watching your screen, and then, out of nowhere, roughly $800 billion in total market value simply disappears from US exchanges in a single session. Not a slow bleed, a single afternoon wipeout. That is exactly what happened last Wednesday when escalating tensions in the US-Israel-Iran conflict ignited a global panic, sending the VIX Fear Index screaming higher by over 12% in a matter of hours. Most high-growth AI equities were absolutely obliterated. Growth stocks, momentum names, speculative tech, all of them got hit like a freight train. And here's the question I want you to sit with for just a second. In an environment that brutal, what would it mean if one AI stock not only survived, but showed up to the fight with its technical floor completely intact? Because that is exactly what happened with Rezolve AI. And the data we are about to walk through confirms something massive. Let us go back to March 14th, when we first identified RZLV as what we called a coiled spring. Our primary technical target was set at $2.87. Now look at what actually happened. On Monday the 16th and Tuesday the 17th, this stock charged out of the gate to intraday highs of $2.85 and $2.85 respectively. We were within literal pennies of a perfect technical hit. This was not luck. This was a near-perfect validation of the 50-day moving average alignment we spotted in real time. The stock was doing precisely what we predicted, building momentum, displaying clean price structure, and setting up for what looked like an explosive breakout. The internal momentum readings were undeniable. Everything was in position. And then Wednesday happened. The Wednesday wipeout was not about RZLV. It was not about any individual stock. It was about geopolitics overriding everything. When Brent crude oil spiked above $111 a barrel on escalating war tensions, institutional risk managers hit the sell button across the entire technology sector. Investors flooded out of high-growth AI equities and rushed into safe haven assets, gold, treasuries, cash. This was the deviation from our predicted price action, a textbook black swan event that placed an external macro ceiling on the entire breakout attempt. But here is what you absolutely need to pay attention to, because this is where the story gets genuinely fascinating. While other high-growth names were breaking below their support levels and cascading lower, RZLV did something extraordinary. It held. On Friday, while the Nasdaq was dropping another 2.01%, RZLV was defending its floor with everything it had. We had identified $2.50 as the hard support, the put wall, the level where market makers have a massive structural incentive to prevent the price from falling through. Despite a brief intraday dip down to $2.46, the stock fought back and closed the session at $2.53. Think about what that means. It held the psychological floor. It recovered from the intraday low, and critically, it closed above its 200-day simple moving average of $2.52. That is called relative strength. When a stock flat out refuses to go down while the broader market is bleeding everywhere around it, it is telling you something very important. The weak hands are gone, and the buyers are in complete control of the price action. So why is this stock showing this kind of resilience? The answer lives in three foundational pillars that we believe make RZLV one of the most asymmetric trades on the board right now. Let us walk through each one. The first pillar is the asymmetric valuation gap. Right now, the stock is trading around $2.53. A conservative discounted cash flow model places RZLV's intrinsic fair value at $3.50, meaning at the current price, this stock is undervalued by nearly 28% on a fundamental basis alone. But that is just the floor. Wall Street analysts currently carry a consensus price target of $11. $11. That is over 300% of upside potential from where the stock sits right now. When you see a dislocation this severe between price action and underlying fair value, you are typically looking at a massive opportunity that the broader market has not yet fully priced in. These gaps do not stay open forever. The second pillar is the smart money conviction matrix. Institutional ownership has now surged to 28% of the float, and we are not talking about passive index exposure. We are talking about deliberate, high-conviction positioning by some of the most sophisticated capital allocators on the planet. CalSTRS, one of the largest pension funds in the entire United States, recently boosted their stake by over 72%. Even more telling, HSBC Holdings established a massive new position right as the macro sell-off began. They are buying the fear, not selling into it. And on March 16th, Rockefeller Capital filed an amended report right as the stock was testing that $2.85 resistance. These are not retail day traders chasing momentum. These are institutional players building a structural floor because they believe they know what is coming next. And when institutions of this caliber are this aligned, it is worth paying very close attention. The third pillar is fundamental expansion happening in real time. Rezolve is not a concept company. They are generating real revenue at scale. They just finalized a $230 million acquisition of Reward Loyalty UK and are actively expanding into European ride-sharing through Free Now. Their annual recurring revenue is projected to surge from $209 million to at least $500 million by the end of 2026. That is not incremental growth. That is a potential doubling of the business in a compressed time frame. And there is one hidden efficiency metric behind those numbers that makes the growth story even more compelling than it appears on the surface. Now, none of these pillars exist in isolation. They are converging along a very specific timeline, and the sequencing matters enormously. On March 6th, HSBC laid their foundation. On March 16th, Rockefeller amended their position. Then on March 18th, right in the middle of the market crash, CEO Daniel Wagner and Director Sir David Wright filed Form 3 reports disclosing massive direct and indirect personal stakes in the company. Let that sink in. The people running this company are personally loading up at these levels during a global market panic. That is not something executives do unless they have total conviction in what is coming. We are currently witnessing a near-complete dry-up of seller supply at this price level. So the spring is loaded, the insiders are in, the floor is established, and now we need to talk about the trigger. This week, from the 23rd through the 27th of March, we have what we are calling the ignition sequence. Rezolve is currently at Shoptalk 2026, showcasing their production-ready agentic commerce platform live to the industry. And they are not just talking about the technology, they are demonstrating 29 times return on investment results for real partners like iBuyDirect. Numbers like that, on a live stage, in front of buyers and investors, create a very different kind of attention than a press release. Then, on Tuesday, March 24th, CEO Daniel Wagner sits down with the Microsoft Americas General Manager for a live fireside chat. A deep, strategic, publicly visible alignment with Microsoft is one of the highest possible stamps of approval in the AI sector right now. These two events, stacked back to back, represent the dual catalysts that have the potential to flip relative strength into an explosive directional breakout. And the mechanical pressure building underneath this stock makes that breakout scenario even more compelling. Between 14 and 19% of the float is actively held short right now. The days to cover ratio is sitting as high as 3.7. In a low liquidity, seller-exhausted environment, those short positions are structurally trapped. Any meaningful positive headline out of Shoptalk or the Microsoft Fireside chat will force those high-conviction shorts to cover simultaneously. When that happens, in a thin, momentum-driven market, the buying pressure compounds on itself. It is a mechanical certainty, not a probability, a mechanical certainty, that forced short covering in this environment will push the price significantly higher. The options market is already pricing in exactly that scenario. Looking at the March 27th expiry, the magnetism in the options chain is hard to ignore. There are over 3,000 put contracts sitting at the $2.50 strike, which places a hard mechanical floor under the downside. But on the other side, there are 2,600 call contracts at the $3 strike. If RZLV clears the $2.75 resistance level, market makers are forced to purchase shares to hedge those $3 calls, a process called delta hedging. It acts like a vacuum, mechanically pulling the price higher the more it moves toward that strike. The structure is set, the pressure is building. From a pure technical standpoint, the price is currently compressed into a tight 25-cent channel. $2.50 is the psychological and options floor at the bottom. $2.75, which also aligns with the 50-day simple moving average, is the resistance ceiling at the top. This kind of compression always precedes a significant volatility expansion. The stock is literally running out of room to move sideways. Something has to give, and the weight of evidence suggests it gives to the upside. Here is the execution blueprint. Your ideal entry zone is $2.50 to $2.55, using that 200-day simple moving average and the options put wall as your structural protection. Your hard invalidation level is a daily close below $2.50. If that breaks, the thesis changes and you respect the stop. On the upside, target 1 is $2.87, a full retest of last week's intraday highs. If we clear that level on strong volume, target 2 comes into focus at $3.09, which would represent a true confirmation of bullish momentum resuming. This is a high-reward, defined risk setup. Before we wrap up, Smart Stock Sam wants to make something very clear. Everything discussed in this video is for educational and informational purposes only. Nothing here constitutes financial advice, investment advice, or a solicitation to buy or sell any security. Investing in stocks involves substantial risk, including the possible loss of principal. Always do your own due diligence, understand your personal risk tolerance, and consult a licensed financial professional before making any investment decisions. Past performance and technical patterns do not guarantee future results. Markets can and do behave irrationally. The bottom line on RZLV is this. Despite a geopolitical black swan that wiped out hundreds of billions in market value in a single afternoon, this stock showed up and defended its floor. The fundamental bedrock is expanding in real time. The institutional smart money is aligned and buying the fear. The short interest creates a mechanical pressure cooker, and two major catalysts are firing right now, this very week. Last week was the test of character. Next week could be the payoff. I am watching that $2.75 level like a hawk. The analysts see $11. The insiders are buying. The spring is under more pressure than ever. Now here is your question for the comments, and I genuinely want to hear your thinking on this. If the Microsoft Fireside chat on Tuesday produces a concrete partnership announcement, do you think RZLV hits target 1 at $2.87 before the Friday close? Or does the short squeeze carry it all the way past target 2 at $3.09 in a single session? Drop your answer below. If you found this breakdown valuable, Please hit that like button right now. It genuinely helps this video reach more investors who need to see this data. Subscribe to Smart Stock Sam if you have not already, because we publish these high-conviction setups every single week. And if you want to help this video climb the YouTube hype leaderboard, share it with one person in your circle who trades AI stocks. One share makes a real difference. Until next time, stay sharp, stay disciplined, and I will see you in the next one.